Everyone, Sean Maloney, Digital Business Masters, another DBM Strategy Call, Monday, the 24th, I think it is today, is it? Very, very important day today, actually. We're seeing an inflection point, especially with the M2 money supply. So we can expect, as always, things now to start to go upwards, which is pretty predictable and is a very, very strong engine with which we operate our digital businesses. We just predict money printing. And because we have a 70-day gestation on that, we can see when it's going to land. And lo and behold, here it is. So we'll touch on that in the next hour. But first of all, let's just make sure that everybody understands who we are. Welcome if you're listening to us on YouTube. Please hit the bell, hit the like. Let us get up that algorithm, make sure as many people as possible in the world now understand more about what's going on in this amazing space. It's very, very basic, actually. It's all about owning the technology, not just using the technology. You'll hear today why that's becoming even more important as we project out for the next 5 years. We've spent the last 5 years, in fact, the last 10 years, talking about needing to own the center of the money supply. That has now become fact. We're now talking about owning the technology rather than using the technology, because we're going to find that AI is going to disrupt the way that people create income. So we'll talk all about that. So we basically specialize at DBM in not only helping people to understand the digital ecosystems that exist now in the world on the internet through blockchain and AI, but we also show people how to take those assets and convert them into income every single day of the month. So that's the bit I think still a lot of platforms miss, a lot of educational companies don't provide. They just tend to tell people to hodl or trade. You know, trading in this space as an amateur is, you're never going to make a living out of that. You need to be understanding how to deploy your assets into positive cash flows. You want a proper P&L and deploy that back to a balance sheet towards a critical mass. That's the only way you're ever going to get a serious business going in this industry, in our humble opinion. So we don't advise people on that, obviously. We've just taken over 10 years of experience just in this digital space, let alone 25 plus years of experience in traditional business. We take a concoction of those things together and then simply guide people towards what they may wish to understand. It's all about mindset, skills, systems, income, wealth. The biggest challenge people have in our experience in the retail space is the mindset and the skills. They prefer to walk away from their obligation to take responsibility, and often complain about that, by the way, rather than face what they need in order to be successful. But isn't that the same in anything in life? Fitness, health, success in any form of activity. People want what they want, but they not prepared to put the work in. So we basically set up the academy about 5 years ago to support people through that process. And some people make it, maybe 10%, the rest don't. But that's okay. That's just life. We're here to support everybody who wishes to be supported. How do we do that? Well, we never stop. We never stop. There's 9 of us around the globe as a coaching community now, continually looking for ways in which we can deploy digital assets into reliable cash flows. That's the mainstay of what DBM represents. The academy side is educational, it's supportive, it's putting people into a place of awareness from wallet management, exchange management, security management, self-reliance. Like I say, a lot of mindset work goes on in there, a lot of support. But the main thrust of what we do as a business is to understand how we can take our established digital assets and put them into consistent cash flows, which isn't easy, because you're going to find, like a normal factory, the analogy we use is a real life factory, where my background is. And, you know, you can walk in every morning into a factory, in a real life factory, just expecting problems. Suppliers, staff, machinery, materials. It's just the way it is. And it takes a very strong person to be able to not only manage that, but grow it. So those of you here live, those of you who are listening to this on the recording, you are that type of person. You see the need. You'll see even more of a need by the time we finish this call today. And you know that you're going to put yourself through some difficult times. But it's much better while you're young enough and vibrant enough to put yourself into those difficult times and testing yourself, pushing yourself outside of comfort zones than it is to get to 70, 80 years of age and go, oh, So don't think this is easy, especially the way we do it. I mean, it's easy to hodl Bitcoin and just hope for the best. It's easy to just put money into a pension plan and hope for the best. It's easy to hold on to your home and hope for the best. It's easy to have a job and hope for the best. But in this model, you're not just doing that, you're also pushing yourself into places that will cause you discomfort. And that's just the nature of it. But the upside is phenomenal. And that's really what this is about. So we're constantly finding ways to stabilize income that helps us build a balance sheet. And the balance sheet then, over time, becomes to a level of critical mass that the balance sheet can fund your business. In other words, the equity of your assets are used to constantly redeploy into cash flowing activities. And the idea is that you get 20% of that, which is a typical, way to pay yourself as a business. And that's what you live off. The rest of it goes back into your business. And you do that perpetually and hopefully well diversified. So we're on a journey just as much as anybody else. We're just further forward than most. That's maybe what it is. So how do we structure that for every ordinary man and woman? Well, we've figured out over the years that we just need to put people through a process. Mindset, skills, systems, income, wealth. And no surprises that we spend a vast majority of our time working on people's mindset and skills. There's lots of marketers out there. There's lots of people on YouTube and the internet who will tell you just to buy my stuff, try and get you in a system, a coin, a project, especially if you're going to get involved with the networking MLM world. They'll throw you straight into systems and just tell you everything's going to be all right. Well, that's what a financial advisor tells you when he's telling you to put your money into a pension. Well, that's what a bank tells you when they're telling you to give your money to them. Everything's going to be all right. It's not. The whole idea is to understand the fundamentals and have enough resilience and fortitude in yourself to know that you're going to put yourself into places that are not comfortable. And then once you've got that under your belt, you can start to figure out how you're going to get the skills to become more comfortable. That's really what skills are about. They just give you confidence and a backbone to be able to withstand everything, right? So that's the reality. And if you can work with people who've got what you want and can prove it, if you can work with other people of like mind, if you can go on a journey together and work together, it just becomes a whole lot easier. In fact, I dare say sometimes it can become fun. So that's where the income people are. So those who work with us every single day of the working week in the DBM workspaces, believe it or not, we have fun. We enjoy looking at things and pushing ourselves and helping each other and questioning what's going to happen next with all the nuances that go on with sustainable income. So no prizes for guessing that the vast majority of successful people are either in systems or income. The most successful people are in income. Of course, that's what income is. So that's our model. It's constantly evolving, and we're very proud of it. And we're more than welcome you to get involved at any level you wish in going forward. Why? Well, because a big part of the mindset and skill is understanding a very, very simple but profound point, which, I feel like a stuck record, having been explaining this now in this space for well over a decade. I used to try and explain this to staff in factories and normal businesses by giving them stock options and giving them ability to earn stock as opposed to just earning wages. That fell on deaf ears as well. Because people think in the here and now. People think month to month to month because that's how we've been taught to think. I think if you're going to listen to teachers and parents and bosses and banks and governments, they're going to encourage you to think in the moment. But it doesn't work like that if you want to be successful in business. You have to build an entity that cash flows. And what I love about the digital space, which is why I've spent most of my time in it in the last decade, is it's just so easy to do. Even if you're just accumulating Bitcoin, which has now become the most powerful asset on the planet, by the way, we'll talk about in a minute. But the whole idea is you can't run a business off a balance sheet. You can't just wait and sell bits of your Bitcoin every year because you're just going to end up treading water. The whole idea is you redeploy. You redeploy. And that's the point about finding the ways to redeploy. That's the whole idea. Yeah. So we specialize in that a lot at DBM. But the key takeaway here is be focused on reallocation of devaluing fiat currency and place that into accretive and appreciating assets that allow you to build equity to redeploy into cash flow. Yeah. Don't just buy liabilities, fund liabilities. It's always the best way to be. How do we do that? Well, we do it across three broad churches. The obvious fundamental is just dollar cost average Bitcoin. Whatever you do, just do that. If you do nothing else, just dollar cost average Bitcoin, especially now. Especially now. Because if you've not noticed, bosses, banks, and governments are now joining that. Yeah. First of all, they'll, what do? They frighten you. First of all, they castigate you. Then they'll fight you. And then they'll join you. So we've very much seen that in the past 12 years in Bitcoin. It's happening right in front of our eyes as we speak today in early 2025. And I'll show you where we're going to go next. So Bitcoin is an absolute. We've learned over the years, even though it's not easy, that you can redeploy. In other words, you de-risk by deploying equity into asset income. Right? And this isn't easy. This basically means that you're redeploying a proportion of your balance sheet into income-producing activities. And it involves getting involved with the trading industries, getting involved with AI, getting involved with OTC, getting involved with companies that require liquidity, that are looking for global crowdfunding from ordinary people, as opposed to what normally happens, which is top institutions owning everything. Think BlackRock. So we're looking for these companies all the time, and it's still very early, but we've identified several of them and been very successful over many, many years. But these are the ones, again, that will move the ebb and flow, and it can frighten you a little bit, which is perfectly understandable. But again, if you diversify it across the piece, then you'll find it a lot easier to take the ebbs and flows of these companies find their feet. Yeah. And we're still very early with that, but we do totally appreciate that it's there for the future and it's something that will be here to stay. We've just got to go manage through it. That's all. Manage through it. And some people find that very, very difficult, which is very understandable. So hence we stick together and try and help people through who wish to be helped. Same with the altcoins. If you think USDT leverage is challenging, you want to be over in the altcoins. Altcoins is even more challenging because it's even more new. You've been through ICOs, we've been through the meme coins, we've been through all sorts of things, especially as the marketers get involved, because they're just looking at short-term selling. So they want quick hits. And they'll sell to anybody that breathes. But you can't get involved with this unless you have the skills and the mindset and the fortitude. Otherwise, you're never going to be successful because you'll just walk away, which is what the vast majority of people do. So those who stick around and understand how to keep managing, even when it does get tough, and it will, and it does, and it always will get tough, you've got to keep going. And how do you do that? You work together to make sure that every day of the week you've got someone you can lean on when you're feeling a little bit punch drunk. Yeah, because altcoins are very, very difficult. But the net benefit of them is rather than simply earning equity in Bitcoin or just yield with USDT, USDC, what you're doing with altcoins is equity plus yield. And once you can master that, you're basically accelerating to a point where your asset base, your balance sheet, funds your business infinitum. So it's a very quick way to get involved with the ultimate goal of your business, which is to have your balance sheet constantly funding your P&L. Yeah, but it's not easy, but we go through the process because as sure as eggs is eggs, this is how people will not just be living, they'll have to live like this over the coming 5 to 10 years, we're now estimating. I'll talk about that in a minute. So why do we put so much focus on this? Well, for years and years and years, we've been talking about needing to become as close as you possibly can to the money supply. Now, clearly, when this was being mooted, when I first started talking about this about a decade ago, it was, well, obviously we can't get into the central banks. We can't become the government, and we can't even get close to the banks. We might be able to become a shareholder, if we're good. And many of us do that indirectly through pension companies, which is very diluted. Some of us might run businesses that give us the ability to run balance sheets and never do everything I've just been talking about, but the vast majority are employed, with the rest being unbanked, which don't even get a look in on this. Over 2.5 billion people like that on the planet. The vast majority are employed. So the employed people put most of the energy in and get least benefit out. That's why you find people constantly, even if they've got decent wages these days, they're constantly chasing currency. They're constantly chasing the next wage increase. That's because of this dynamic. So what have we done over the years? Well, we've looked at it and said, okay, well, where does the money supply come from? And that's not been easy, because there's that much derivative, there's that much leverage now inside the system, certainly over the past 50 years. Those of us, growing it up in through that process and getting into work maybe in the past 30 years, 40 years, have not been able to catch this because of the derivatives market, especially through the 90s. So we've just been left hoping that somebody somewhere is making decisions on our behalf that are going to benefit us by the time we get to 70. And then some of us looked at it back in 2008 and said, whoa, hang on, there's something wrong. This is wrong. Something is fundamentally wrong. Now, thankfully, many of us caught that in 2008. The vast majority of the world still has no idea. But then luckily, again, for those of us who understood it, Bitcoin came along. Yeah, because even gold as central money supply, which is still the case to this day, even though it's hit new all-time highs, can't give you the access you need to enough leverage as quick as you need because it's diluted by so many ETFs. That's just gold itself, physical gold. It's just paper gold these days. It's not actually built on anything. Bitcoin is a totally opposite to that. Bitcoin over the past decade has become that firebrand, that energy that's put many of us on a place now where we are not just owning the asset that massive banks and governments are now falling over themselves to own, but Bitcoin is starting to become the center of the money supply. Think about that. So all of a sudden, which we didn't see coming, I certainly didn't see coming, but it's great that it has, we're now in a position whereby we own what a lot of the governments now are putting on their stat sheets. As we speak, literally. So we found ourselves right in the middle of this money supply. Now, whether that is taken over by the central banks is a debate. I think the central banks will have to adjust because of it, because Bitcoin doesn't need banks or governments. Governments and banks need Bitcoin. That is profound. That is profound. Now, our job over the next 5 to 10 years is to leverage that to give us enough momentum, not just to look after our own lives for the rest of our days, but to look after our kids and grandkids for the rest of their days. And that is very doable, as I'll show you now. Because what we talk about every week, and you can backtrack all through the YouTube channels and all through the blog at DBM about this as much as you like, we keep talking about the actual practical side of what we've been theorizing for most of the past decade. Yeah, we got a wind of this a couple of years ago, and we were watching them for political momentum. And we got lucky at the end of 2024, very lucky, because the businessmen got back in power. Now, you can have your own opinions on that. You can have your own opinions about that statement, but the facts of the matter are that you've got to a certain level, run countries the way you run companies. You can't just keep living off the back of borrowed funds. Every normal adult knows that. And all of a sudden, it's shifted. Now, it's not going to shift in the sense that we're back to a point of standardization and being able to get money supply under control. That may not happen for the rest of our lives. But it doesn't matter anymore, because if you do go back to 2008 and then 1999 and all the way back to 1971, you realize that what's actually at play here isn't the need for the system to be perfect. It never will be while people are involved. What you need to do is understand how it works. And we've figured this out a long time ago. But now we're in a point where we can predict it. So how do we do that? Well, the main way we do it is through M2. The M2 money supply, there's various levels of money supply in terms of how it's calculated. But just today, 24th of March, we're now at the inflection point of another 70-day offset to the money supply. So has anybody noticed just today, how Bitcoin and stock going back up again. Yeah. Obviously, there've been lots of frightening things going on in people's minds, at least around tariffs and whatnot, and changes and aggressive policy shifts that the businessmen are putting in play because they have to. They have to cut costs and they have to drive revenues. They're going to do that in all sorts of different ways. But the main way that they hold on to the line so it's not a complete shock to the system is they print currency. And they print currency in all sorts of different ways. But we saw this 3 months ago. So what do we do in those cycles? Well, we expect drops, we buy, we hold, and then we wait for the next growth. And that, as it happens, is starting today. On a macro level, I'm talking about. There's all sorts of micro stuff you can look at, but macro level. So these are massive tailwinds. We're talking about this for the past 3 to 4 months. And we saw it coming. This is what this chart is on the right-hand side. Yeah? You can predict it that easily. Done this for years. Done this for years and years. And Bitcoin in particular is sensitive to it. And Bitcoin in particular is powerful because we don't have to wait for permission for some bank to issue a stock certificate or wait for some, institution to decide that they're going to provide liquidity to us. In fact, most people never see that until they're at a certain age. We don't operate like that in our world. We're buying up the asset that is going to explode, and we leverage that to our heart's content whenever we wish from the comfort of our own offices and computers. So we did it, a few months ago. We did it a year ago. We did it 3 years ago. We did it 5 years ago. We did it 10 years ago. And now we're just about to do it again, but it's happening quicker now. Why is it happening more quickly, more aggressively? Well, because there's more than just the hard realities of M2. You've got a lot of the soft stuff going on behind the scenes as well now, such as the most powerful, allegedly, man in the world, the president of the United States, talking at crypto conferences. What sort of confidence do you think that gives to the space? What sort of confidence do you think we find when there's a debate going on, a huge debate now going on, between gold-backed stablecoins and US dollar-backed stablecoins? Who's going to win that race? And why should we be watching that very closely when it comes to US dollar, or the USA, basically, which also means every other country that's currency is based on the US dollar, by the way, which is 97% of them. Why should we care about that versus the BRICS, who are organizing themselves on a gold-backed stablecoin? Why should we care about that? Well, there's many reasons why we care about that, not least with which is the release of sanctions and the reorganization of trade around the world, all based on, again, a movement towards sound money. But while it's moving towards there, they will continue to print fiat. So we're looking for a win-win in Bitcoin. That's the profound nature of where we're at in 2025 that we've never had before, if you understand it, of course. So then once you've got the stablecoin dynamic organized, we'll keep a very close eye on that over coming months. You've then got the balance between stablecoins themselves, which is where we want to be, and something called central bank digital currencies, where we don't want to be. Now, for the longest time, central bank digital currencies were an inevitable part of where we were going. And it still may be that case. We don't know yet. But the stablecoin dynamic has become a huge breath of fresh air because it enables us to still interface with our profit and loss accounts, to move around and buy things and sell things and operate as ordinary people funding liabilities. But we're going to be doing it off our own asset base, predominantly based on Bitcoin, which by definition is also benefiting from other countries and companies using Bitcoin for the same thing. That's what I mean by being closer to the money supply. Just by owning Bitcoin now, you are the money supply. And for the first time in human history, you can become an independent owner of that privilege. The question is, where does that interface then with the funding, notice funding, not buying, funding of liabilities as you cycle through the decades to come? Where does that sit? Now, what we know, with the knowledge we have, there's no way we're going to touch central bank digital currencies. Not because they're no use to us, they are. You can still buy stuff, but it's the tracking of them. It's the lack of privacy. It's everybody knowing your business that we don't like. And as we stand today, there's only one continent on the planet that's threatening to put that into place. Just one continent. You've got to question why that is. And if you are one of those 420 million people living on that continent, you might want to start thinking about making a noise about that. We've got till October, according to the ECB. Let's see what happens. Either way, we play both because we can, because we are our own bank. Big step again in just the soft stuff that goes on, SEC, confirming that proof of work mining is not a security. We've known that for a long time, obviously. But the SEC and all the other three-letter institutions have decided to make it difficult for us, and now it's off the table. It's not a security. We push on. Proof of work mining, if you're mining, well done. Push on, you're great. And if you're not mining, think about mining. Get into that if you can. Tether, one of the, if not the, well, no, if not, it is the largest USDT stablecoin, USDT-backed stablecoin. Confirmed now as the seventh, never thought I'd be saying that, the seventh largest buyer of US treasuries compared to countries. Obviously, there's much bigger buyers of US treasuries, BlackRock and all the big, Fidelity, they're the biggest buyers of US treasuries, obviously. But from a country point of view, USDT Tether is the seventh largest buyer. Very, very quickly, you'll see that go towards the top. You're not going to get out the Cayman Islands just yet until they start to, well, they won't, will they? Because the big governments, the politicians, the big business people, they make all their money offshore. So Cayman Islands will always be the biggest, but I suppose. But for the rest of us, we can slipstream what's going on just by using Tether. And I've said it for years, those of you who listen to me when we talk about the trifecta, yeah, the way we triple lock, you're constantly moving yourself back to USDT. That's how you do it. And this is why we do it, or part of the reason why we do it. Yeah, if you were listening to the New York Crypto Conference last Monday, you'll hear US Tether being very candid, actually, and very open about their obligation, as they said it, towards helping the unbanked of this world. 2.5 billion. Now, what would it be to the liquidity of the movement of the digital asset that we're already doing day to day anyway, if 2.5 billion people start to use it as well? What do you think is going to happen then? That's bigger than just country. And this is where it's important to understand that dynamic between not just stablecoin and CBDCs. I think there's only going to be one winner there. But when it comes to gold-backed stablecoins and US dollar-backed stablecoins, who's going to be the winner there? And does it really matter? If you own enough Bitcoin and enough hard assets underneath what you do as a business owner in the digital space, it doesn't actually matter. But on the journey there, it's going to be quite nuanced. So let's keep an eye on it. Big one, again, here, this is a big one. I think this is going to happen, actually. The US using their existing gold reserves, whatever that means, to get ahead in the Bitcoin hash race. It's palpable now. And again, we didn't see this coming. Why would we? But it's palpable now that there is a race on between the US, Russia, and China in particular, or mainly BRICS. Russia's driving the BRIC nations now. That's why we've got some interesting discussions going on today, actually, right now, over in Saudi Arabia about the release of sanctions. The whole idea of the US being so sensitive to the fact that it needs to front run this, otherwise it's going to lose its hegemony. Now, how sensitive are they to it? Well, pretty sensitive. Pretty sensitive. They're talking about buying up 200,000 Bitcoin per year for the next 10 years. Well, that's not going to be fast enough. So I think what they're going to do is take some of the gold reserves that are still priced at $49 an ounce or something stupid like that, based on what they've got in the Pentagon, even if we know what they've got in Fort Knox, even if we know what they've got in Fort Knox, which we don't, but neither we do in China, right? So it's all smoke and mirrors. But even just a sniff that they're going to take a reasonable portion of these gold reserves and transfer it over to digital gold is big enough for us. Again, we can't lose, right? So the whole idea is to be aware that's going on, but most of all, the reasons why it's going on now. It's no longer just about owning Bitcoin. It's about the hash wars. The hash wars. Absolutely critical now because Bitcoin has become a major part of the center of the money supply. And in my estimations, it will become the center of the money supply over the next few years. I'm talking about Bitcoin still, okay? Now, other technologies are trying to get involved with this, but they're not decentralized like Bitcoin. And they don't have anywhere near the hash rate powers of Bitcoin. This is where people get mixed up and they get drawn along, especially with the Ripple army. Now, the Ripple army is strong. These guys know what they want, okay? But they're a very different technology. But the sheer fact that the SEC has got off their back finally is a positive thing. We all want a bit of Ripple, right? But there's no competition between Ripple and Bitcoin, no matter what the army say. There's just not. The hash rates, just go and have a look at the hash rates to prove that to yourself. It's just mathematics. So the whole idea that Ripple now has been given a new lease there to move forward has had a price impact. Fantastic. Okay. Have it on your portfolio. Fantastic. But it's not Bitcoin. Don't be under any illusions, no matter who you're talking to. Big one here, last but not least, just this weekend. If you can't beat them, join them. Now, we know the IMF is just a cacophony of different central banks all flexing their muscles and picking on countries. They've done that for 40, 50 years, if not longer. So we know they're just the bullies of the financial world. Look at what they've tried to do with El Salvador over the past few weeks. But just now, we're not going to get around this. They tried to tell El Salvador what to do a few months ago, a few weeks ago. They even tried to tell the USA what to do last week. And by definition, the USA just batted them off like a fly because the US makes up most of the IMF's power. So what have the IMF just done? Oh, well, we're not going to be able to get around this. So we'll start to accumulate some Bitcoin. Bang, we're in. Now, is that something that is necessarily good? You can debate that amongst yourselves. Again, it doesn't really matter for us at this stage over a 5-year cycle because it's just going to put more power under the price of Bitcoin. And you don't need that much as an individual for that to set you up for life. I've said forever, just own one Bitcoin. In fact, now it's becoming more just own 0.1 Bitcoin. But if you own one Bitcoin, you've done very well. And obviously gold pumping, but gold will do what gold does because it's a safe harbor and it always has been. It's the toga in the suit. Just accumulate. I've said forever as well, just own 1 kilogram of gold if you can. Own one Bitcoin and 1 kilogram of gold, you're set for life. You're set for life. So the dynamic still continues. M2 money supply. Bitcoin standard reserves, sovereign reserves, plus over-the-counter diminishing quickly, plus exchange reserves diminishing quickly, plus global demand except the EU until they wake up. Doesn't really matter to us, even if we do live in Europe, because this is a globally connected interface, a globally connected technology. So it doesn't matter what the EU do. But if the EU don't wake up quickly, they're going to get left behind. It'll set them back 100 years. I don't know what they're playing at, but it's because they're a bunch of bureaucrats and they don't have any leaders. So those countries who've got out of there, well done. If you're still stuck in there as a country, just think about yourself. All of it leads to price. All of it leads to price, which is exactly what we're seeing as we go through this next stage. So geopolitics, I've touched on a few things, so I can fly through this relatively quickly. Like I say, we're moving now into hash races, not arms races. The Americans have seen this very quickly. In fact, they've exported the military complex away from their shores in one fell swoop. Doesn't really matter to the US because they have most of the manufacturing and technology in the arms race. Yeah. So they know they win anyway. But the Europeans have been daft enough to pick it up. And that's not just happened this last couple of months because they need to extend the budgets to get more defense in place. They've been being lazy and lethargic for 50 years. They've been leaning on the big brother over in America, trying to get them to look after them. Dangerous stuff. It always has been. Okay, so get defense budgets sorted out. No problem with that. But if you're going to print money to do that, just know that that's going to diminish the purchasing power of the middle class in Europe for decades to come. Yeah. So alongside the reasons people need to understand to extract themselves away from full reliance on fiat currency, you also need to make sure that you extract yourself away from funding the defense and war and the military complex that exists now in Europe more than it does in the US. On top of that, you've got AI. So all three factors lead to the need for you to become your own bank, period. On a bigger level, the capital markets race is on. Yeah, this is what really drives everything in the world, obviously. And Abu Dhabi and that part of the world over in the Gulf, they've spotted it. They've spotted their opportunity. They've been eyeing this for decades because of their oil, obviously. A lot of that went through over the past years. The petrodollar, we saw that coming a mile off. Yeah, it's been going on since the 60s. It's all now coming into their favor because they can now start to take over the capital markets. And the US knows it. That's why they're meeting today. Part of the reason they're meeting today and part of the reason they'll keep on meeting in Saudi Arabia, because the Americans know the Saudis have got all the cards, followed by the Russians. So they're not going to leave the world in its current state. It's only going to be the Europeans that are just blinkered by this and are picking up the debt race, the arms race. So naive, it's not funny. But it's in our business model, it's just important we get back to normal discourse, trading, making sure we have proper organized policy in place for cheap fuel. That's the big thing going on in the background, which is exactly why Russia has been allowing institutions to make crypto purchases, and it's been transacting oil with China and India for years, which made the sanctions that the West has put on Russia completely defunct, a complete waste of time. So what we're looking for now with very sharp eyes, because we've been caught up in this a little bit with one of our projects, we're looking for the dissolving of those sanctions because they're a waste of time. They're not helping anybody. The Europeans still think they are. In fact, the Europeans last week put another 12 sanction policies back on Russia. It's not doing anything. The Europeans are so naive, it's not funny. So you'll find the easing going on, and that's good for us on a big global level, from a business model level, and it's certainly good for Bitcoin. Back to normal discourse. That's all we need, and most of all, of course, stop killing people. ECB, I don't know what they're playing at. Well, we do, but the people who are running that need to go, frankly. They just need to go. So you've got this petrodollar pseudo-democracy thing going on, this European experimentation. Fine, work together as a trading bloc, but clearly they can't operate politically. It's quite obvious now, right? Quite obvious. I mean, I live in the UK, but even in the UK, we're moving quick enough to keep up with Doge. Without Doge, a lot of the stuff going in the UK as of this week would not be happening because there is no imagination within an accountant and a lawyer running your business, running your country. Well, because they can't help it, they have to see that they have to take cost out, and they've done it. They're doing it. So be fair to them, they're doing it. I'm talking about the UK. Nothing going on in Europe. Maybe Italy at a push. So we'll see what's going on there. But she said, Lagarde has said, you're ready to go with CBDCs by October 2025. It's going to be very interesting. You make your own decisions whether they're going to pull it off or not. But at the end of the day, like I said earlier, it doesn't matter to us. It doesn't matter to us whether it's stable coins, even USD or gold-backed stable coins, or whether it's fully fledged central bank digital currencies. It doesn't matter to us. They're just off-ramps. They're just off-ramps, which is why you need to really double down now and get into your own bank, your own balance sheet as quick as you possibly can. All we're doing is mirroring what bosses, banks, and governments are doing. We're hedging. We're slipstreaming. We're following the money, as we've done forever anyway. But now it's even faster. So for the first time, Bitcoin holders are protected because we're in the center of the money supply. And again, think about that. So just to finish, what can we expect then? This is interesting because it's not just about macroeconomics and geopolitics. Those of you who've been tracking DBM for most of the last decade, we put a lot of weight on gold for this over the past years. And then obviously more recently, we accelerated that into Bitcoin for obvious reasons. But in our opinion, this is sort of where you're at right now with a 5-year rollout to, first of all, protect yourself, then protect your family, then protect your future, which is legacy. Okay, now if you're feeling jaded or you're feeling like it's too difficult or a project hasn't quite worked perfectly or you're sick of trying to jump through hoops to keep up with various things, just print this off and stick it on your office wall. If not for you, then for your kids. In our estimations, up to 2026, Bitcoin well over $200,000. You're going to find the fast chains catching up, 20 million daily users. Big step up from where we are today. There's reasons behind that. The key is you're going to starting to see humanoid robots. This is the AI type of stuff, the automated stuff coming in. And a lot of vibe programming is going on already, and it will really accelerate this next year. We're using quite a lot of vibe programming to do the marketing side of stuff, to build little widgets for ourselves. We're babies compared to what some people do, obviously. But you're going to find that large language modeling going on. You've all used it already, maybe on ChatGPT or Grok, yeah? You're using it more and more and more. You're going to find this takes over how things are done in ordinary business, yeah? Just in this next year. Up to 2027, you're going to see Bitcoin pumping past $500,000 in our estimations. Blockchain, mainly because blockchain usage will go past 100 million users, and you're going to see more robots AI robots now, not just robots in the sense of centralized programming, but AI robots in manufacturing, fridge freezers, TVs, all this. Just look what's going on in China. The AI race between the US and China is all about that. They're going to onshore manufacturing, and the Europeans better catch up quick. In other words, they need cheap oil and gas back to get the manufacturing base back up again. And then they've got to figure out how to work AI, and then they've got to deploy it. The Chinese are already well down that road. The US are catching up very, very quickly, and they're using Bitcoin to drive that yield. Yeah, they're using it. Look at what's going on with how they're raising funds. So that's 2027. And by 2030, which is what we've had our eye on for a while, this is what's called singularity. You're well past $1 million. Blockchain usage, 1 billion daily users. Think the internet back in 1994 to where we are today. What an exponential curve. Home robots at a cost of less than 20 grand. Look at what Tesla's now brought into play just in this last few weeks. You're going to get AI, then designing and running factories, disease diagnosis, repetitive jobs such as accounting, legals, marketing, advertising, all going to be done by AI. So why is that important? Well, because the probabilities, the chances are, and even teaching, the chances are that your kids and grandkids are going in thinking about jobs the way we thought about them. It isn't going to be there. So what do we have to encourage our kids to do? Well, we have to encourage them to become the owner of the technologies, not the user of the technologies. If you're just a user, you will be used. We've seen that already with the internet just over this past 20 years, right? Those of us who understood it and got into e-commerce and figured out how to connect, supply chains and sales channels globally, which many of us did. And then we figured out, well, that's not good enough. We also have to actually understand and fundamentally own the monetization of the internet. And now it's the monetization of AI. All the trading, all the interfaces will be done through AI bots over the next few years. So you need to own the fundamental assets that make that work. And it's just been proven and absolutely made clear that a big part of that is going to be Bitcoin. That's why Bitcoin will become the biggest asset on the planet, the center of the money supply, and all financial systems will interface off the back of Bitcoin. So you need to own Bitcoin as quick as you possibly can, obviously, to make sure that you've got that leverage as a balance sheet to constantly drive equity into the ownership of all these different technologies to cash flow and make a very good living. Next week, I'll show you some mathematics around how much Bitcoin you need to own between 2025 and 2030 in order for you to sustain the same living wages you've got today, just owning Bitcoin. Very, very interesting maths that we've figured out. We're doing this day by day, every single day of the week, not just talking about the big macro levels I talk about on this call and all the geopolitics that are coming to us, from sanctions to organizing trade channels and getting back into discourse, but we go down into the detail of saying, right, okay, I think I understand it now. I do have to own Bitcoin. I need to own that as a means to get leverage so I can own more assets that are moving towards technology that allow me to create an income off the back of my own, asset base. It's not me going out every day that needs to go and earn the income. It's my assets that go out every day. My job is to get the skills and mindset to be able to start that and continue it. That's where DBM's heart is. That's where we come from. All right. So if you need that, go into any of the subscription levels you wish, and we'll look after you over there.